YouTube, it's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online as usual. Today I'm going to do the due diligence video on 217 West Stone Street. This is the last of the recent properties that M1 brought to Lofty's Marketplace. It is a duplex with an additional a third unit ADU, which is from the garage, a garage being converted. It's showing almost a 12% yield as an unlevered property, which if this were a durable yield that I believe in, yeah, it's a great yield to get, unlevered. And I think that even if we dig into it a little bit, um, I think if you get high single digit returns with an unlevered property, I'm pretty happy with that a lot of times if I'm happy with the property itself. Um, I think of all the ones that I've reviewed, this is probably going to be the one that I like the most. Doesn't mean that I'm going to buy this one, but I think that there's, if I were inclined to buy one of them, I think it would be this one. But I'm gonna go through quite a few things, and talk about it. Just, please like and subscribe. And as always, please do your own due diligence on any of the properties that you see me talk about on here and any of the platforms as well. There is a link in the description to this video to all the platforms I currently invest in fractional real estate on. That list, the what I have invested on different platforms is changing all the time. I'm taking a big chunk of my money off of ground floor. Well, a big percent. I didn't have a ton of money on there, but taking it off there because things have changed, and so that's always going to be the case. One of the things, if you're watching this video sometime in the future, you want to pay attention to when this was put out, and do your own due diligence on what's happened since then. And even if it's something that I just put this out today, you want to also look into all the things that a lot of the stuff I just kind of go over quickly. I mentioned some stuff that I'm thinking about, but you want to make sure that you're really thinking about all these things yourself as well, before making any decisions. Also, if you want to jump in the Discord and talk about this property or any of them, there is a link to my Discord channel, that's just for fractional real estate investors in general to talk. We've got over 80 members now, talk about a bunch of different platforms every day. But that is the whole commercial. Sorry about that. So back to this property. Um, so it's in Gibsonburg, Ohio. I had never heard of this place. I had to look it up. It is a little bit, it's a little bit bigger than, some of the other towns, but still very small population. It's 53 kilometers, okay, 33 miles. So we talk about miles here, not kilometers. And southeast of Toledo, which, Toledo it's not a tiny market, but it's all, that's the biggest nearby market though. But so when I look at, the first thing I always want to look at is population trends. This one's a tough one, right? It's been going, okay, went down, went back up, went down, went back up, went down, came up a little bit. It's fluctuating quite a bit. It's actually not too unusual to see that with like really small markets because it doesn't take very many people. I mean, like even though these are percentages, we're talking about less than 100 people up and down each time, right? So it's definitely not a quickly growing market, which is unfortunate. But it is this is it's very similar to the other markets that we looked at, that M1 brought those other three properties. Um, I wanted to look at the county as well, because I think the other county was actually, I think we were south of here before. Um, Same thing, here it's actually a little bit more clear that it is a shrinking population. If you know me, if you've watched my channel before, that's typically a no-go for me unless there's some really compelling reason to buy the property. If you think about supply and demand is what creates the price of houses and the price of rent. Well, if you have less and less people living in an area, you have less and less demand. One of the reasons, that you have seen, this hasn't hurt markets as much. I don't know that I've ever mentioned this, and it's something that I learned about a long time ago. Never, it definitely impacts us. So average household size have shrunk quite a bit over the last several decades, and so it's allowed populations to shrink, um, and still demand a similar number of housing units over time because there's less people, but there's less people per housing unit. Um, but there's only so much of that that can happen while populations can continue to shrink um, significantly more. So I think that's actually one of the reasons that some markets that have shrunk a ton over the last 30 or 40 or 50 years haven't had their values hurt as much as they could have been. And although some of them haven't done well at all, but I think over time you'll see that that effect protects them less and less because we're already very close to um, people are already using the utilization rate of homes, right? Like the number of people per unit is way down from what it had been historically. If you saw any sort of backtracking in that, we would all of a sudden have just an unbelievable amount of surplus homes in certain areas, and this is probably one of them. But all that being said, Gibsonburg's housing has had a really nice uptrend in pricing. If I were going to invest in this one, I'd want to spend some time trying to understand what's happening here. But I mean, that's one of the best trend lines that we've seen in a long time. Uh, oh, wait a minute though. That's the for sale. Oh, but that's really interesting. It's not filling any of these in. No, nothing for sale, no new listings. Why is that? That's super weird. I wonder where this is coming from. So I wonder if that's some sort of error. I don't understand how it can give us this, but not be giving us any data here. Um, I don't know, but again, that at least that it looks promising. I'm wondering if this is just an error or what's going on. Usually we have a little bit of data that we can look at here and talk about, but we're not going to do that in this case. Um, I was checking out the map initially, right? And so one of the very first things that I noticed is you have train tracks here, right? And that's why I like to use this, overhead view is because you get a lot of info on things that you might want to be worried about, right? Like you can find out what do you back up to, and okay, here we're next to other neighboring homes. But so whenever I see train tracks, I know if these have depending on the times of day, it can make it really hard to rent homes nearby if you have a lot of noise. And so I don't know if everybody knows about this, if I've shown you this before. Come on, where is that? There we go. It just drops down when you scroll down. So you go to the neighborhood information, um, and then you go to the lifestyle section, and it will tell you how quiet the area is. This is one of the things. And so you want this number to be, the higher this is, the better. 7 out of 10 there's some sources of noise nearby, but that's actually a pretty decent score. So, if the lower that gets, the noisier the area, and that often leads to making it being really difficult to rent a place. So I was actually glad to see that that wasn't it wasn't noisier than that. Um, my guess is these are not like really highly utilized. Just wanted to take a quick look and see if we could, in this street view, figure out like, are these actually even active tracks? I mean, they kind of look like it. I don't know. Still have your crossing and everything. Um, but where that noise score is pretty low, it makes me think that I wouldn't be too worried about this. Maybe it's maybe you don't get a ton of trains going through, or they just keep them to daytime. Sometimes that's the case where you just don't have a lot of night. I don't know, but I mean it's certainly close enough that I'd be worried about it. Um, Here's our home right here. So oh no, right here, I believe this is it. Yeah, that's the one. And so, I mean, you can see them from the front yard here. Um, One thing too, there's definitely like certain communities, people just get used to hearing them regularly as well. But I mean, 7 out of 10 is a good score, so it makes me think, it's I wouldn't be too worried about it. you can tell I'm sort of I'm going back and forth because it's just very close to those tracks. So I don't know why it's such a low score. It's unusual to me to see that. But that's one of the reasons that I like to use this. We can see stuff like that. It gives you ideas of other things to check on. I spent some time in the little street view. Yeah, this other little garden center too. Like, um, if we were a little bit closer, like if we were one of these homes, I'd be worried about like the sound of trucks and whatnot. But there's something uh, that those were the only things that I really noticed though when I was looking around on here. But obviously, I like to use this as much as possible. You guys see me do that on almost every single one. A couple of things. So looking at the spot crime map, this is again just like his other ones. I mean, just almost nothing. Well, if you get close to his property, really nothing. And so I don't know. One of the things that I start to wonder is like, are they just not reporting things to whatever database that spot crime pulls stuff up in, right? Because I mean, before we had um, a really tiny market, so it was kind of believable. But I mean, you have 2,400 people here. It seems like we should have a little bit more than this, but nothing showing up there. So really one of the cleanest spot crime maps until you start zooming out and getting pretty far away relative to just about everywhere else that we look. That's one of the real pluses of having this small market, not a lot of stuff nearby. I checked the FEMA flood map. That looked good. I'm not going to pull up the FEMA hazard or the risk, the hazard map that I usually do. It looks very similar to the other ones. But obviously you want to dig into that, look at the natural disaster stuff if that's stuff that you're interested in or concerned about. But this part of the country seemed really low for a lot of stuff. Obviously, there's some snow issues and whatnot. Um, a couple of things about the valuation I want to dig into. So one, it looks like he bought this for $85,000 in March of last year, so a little over a year ago. Um, the appraiser gave us a $110,000 appraised value. Although when he did the different approaches, he thought his income approach meant it would be 142,000, but by sales comparisons it was 110, and then he used 110. Um, I don't know. I think that that's probably the right answer though, because I don't know. Whenever you have these residential appraisals and they use an income approach, it's not a very robust analysis, right? And so I think it makes sense. It's why one of the reasons they always go back to the sales comparable approach is because that is, the dominant driver of pricing. Is just what the other comps are. So nothing. I didn't notice anything too interesting out of there that I want to point out. All of the leases, it looks like, have been signed since the purchase. So I don't think, so they're all brand new leases. So like one of the things that I always want to think about is there upside in the rental rate? Well, if they all just signed last year, I don't think there's going to be a big move there. Um, oh, but we are talking about valuation. So 110 is what the appraised value is. A realtor had said 122. What happened to my Zillow tab? My Zillow tab is gone. Let's see. Let's just pull that back up. I had a little issue with my Wi-Fi while I was in the middle of this already once. I tried to just like gloss over it, but I bet you saw where that happened. Yeah, the Zestimate though says 90. So this just says one bed, one bath, but it seems to have the right square footage of everything together. Again, we talked about this a little bit. It is really hard when you have these like smaller markets. Pricing gets harder when you have, especially with really old properties. This property, the build date is listed as like 1900, which it probably isn't exactly 1900. It probably just means they don't have a good record of when it was built. Um, when you have these old properties, they were all built differently. They're not cookie cutter like you have in subdivisions today. And so trying to get a value on something like this, and okay, it's a duplex and it's got a garage and that garage is converted, like it's very difficult, right? And so it's one of the reasons that I don't like these types of markets because it's difficult. But it's also probably why he's doing well buying low and selling high is because it's easy, it's relatively, there's not a ton of demand for the properties. It's probably easy to pick them up cheaply, and then if you have them rented out and you can take your time with a sale, and you're selling it as an income producing property that's already set up like that. um, I think it makes a lot of sense for his strategy. So if you don't know what that is because you didn't watch the other videos, he wrote this book called oh, what was it? Swing or Be Swung, but it was, he calls it swing trading real estate, but it's talking about buying real low, just making a lot of low ball offers until you get a property, um, getting it rented, getting it, operating in a way that it's attractive for an investor, and then with it, that a year or more later, selling it to another investor. That's his general strategy. And just judging from the properties he's brought to the platform, he's very successful with getting these low. And then you can see, I don't think I even showed you yet, this is being brought onto the platform at 115,500. So a $30,000 increase, um, from what he bought it for a little over a year ago. And it looked like all those leases happened pretty quickly. So I don't think there was a ton of work that was done to it, in the meantime, right? I think he bought it, leased it up pretty quickly. That would be one of the things that would be interesting to hear if he did do any work on it, getting an itemized list of like what was actually done, if there were improvements or whatnot. It might make me think a little bit more about, um, maybe that price really should have gone up 30K, and that makes a lot more sense, right? One of the things, I think I've used the term exit liquidity a few times, and I don't think, I think some people think that has a more negative connotation than maybe I do. It's just really, he's using this as a place to sell these out. Although one of the things, Josh, that's M1 is Josh, this owner, here, but one of the things he mentioned is that he plans to hold at least 50% in any of the ones he brings to the platform. I'm kind of curious if there's any way that he can actually like make that commitment in a way that Lofty could like lock it in on his properties, because it would certainly make some people feel better. Because the rule is you have to keep at least 10%, right? And so if you think about, okay, if he sells 90% of it at 115,000 valuation, well, he's got all of his money back and then some, and still owns 10% of the property, right? And so, um, knowing that he plans to hold, a 50% stake in it makes me feel a lot better if I wanted to invest in this, and I want someone who's, has a real stake in maintaining it in a way that it's continuing to make money. I think that'd be interesting. I don't know. I don't know if there is a way for them to do that or not. And with everything else going on Lofty, it's probably not the time to ask them. But it would be. Um, I mean, even if it was just something that, I think he just made that comment in one of the discords. But putting it on the listing page, having it be something that we at a minimum can check on and see if that's the case. I really always like to know how much the people that are running the properties, how much they still have skin in the game there, right? So that would be fantastic if that were the case. And it is what he said, but I mean, if it were the case that there was some way for us to track it. Um, this one has a very similar problem to the other ones that I mentioned, where the rent per unit is very low. Now, this property is significantly better than the one that we looked at with the post office, where they had like $300 and $400 leases. I think those are really hard to manage profitably. I know I mentioned here in San Antonio, we like to have at least $1,000 per unit in rental income, because when you start to get to really low numbers, it gets very difficult to be able to keep up with the capex, the repairs and maintenance, and still make a profit. And that's one of the things I was talking about. Like, if I thought this yield were very durable, I still, I mention this every time I do one of these. I hate the way that Lofty does yields, right? They don't account for, so let's see, this 22,200 is what? 22,200 divided by 12 is 1850. So, they don't have any sort of vacancy collection loss built in, right? 1850 is just if you add those three lease amounts together, 600, 650, 600, yeah, 1850. So they never put any sort of vacancy or collection loss. They're assuming it's 100% occupied. Um, they do have this utilities number in here, which seemed like they were annualizing, the costs of one of the units, that just happened to be vacant that month. You know, all the units that, Josh says have their own meters, and the tenants pay completely on their own. So the only time there should be a utility expense um, is if it's vacant and you're keeping the utilities on to show it and everything. So that's probably an inflated number. So I don't know, maybe that yield's actually pretty good then, right? But there's no repairs and maintenance or anything like that. And so that's what I think becomes really hard to manage. And again, I mean, just like his other properties, um, these are not maintained in the manner that I typically expect for a, professional uh, property investor to maintain them. He has a different strategy, and I think a lot of it is dependent on this market because it's such a low rental rate market. I don't know how you could afford to maintain a lot of this stuff and still make any money. Um, but I mean, so like there's comments about the roof. The metal roof, I actually tend to agree with, he said, it's just a metal roof. We can paint it if you want to. Until the rust actually goes all the way through, you can have a really bad looking metal roof that's working perfectly fine. The inspector said something like you could paint it, but it's not likely to do anything. Well, okay, but is it still watertight? It seems to be at the moment. Um, I've really never seen this where you have like sections of shingle and then metal roof and then shingle again. Uh, and like stuff like this is worrisome, right? Like wa get, getting water into your property is like over the long term is the worst thing that can happen to it, right? Like you can just get a lot of rotten wood. You can end up with termites because of it too, because of the wet wood attracts them more, and um, it can lead to a lot of problems, and you don't always notice it right away, depending on where the leak is and whatnot. So, yeah, if you did get to a point where you have to replace this roof, you're talking about wiping out a large portion of your income because you have to have a 2,400 square foot property with three separate units and to only be bringing in $1,800 a month seems pretty difficult, right? You have three kitchens, you have uh, probably just three bathrooms. I don't remember. It might be one of the units might have more, but like all those things like are expense, have a minimum cost to maintain that is tough to cover with a $600 a month lease. Although, we're at least getting up a little bit closer. We're not in the 300 and 400, but there are some cracked windows. This is some rotted wood, and this is the stuff that scares me, right? Because like sometimes you'll go to start to repair this, and it turns out like you just have these big chunks of rotten walls, and it doesn't take a whole lot of that to start to add up to hundreds and then thousands of dollars to repair. Um, but I think overall, this one seemed to be in overall better condition than the other ones that I was looking at. I didn't see anything. There was a note about some missing GFCIs, the ground fault circuit interrupters. One of the things I had said that in another video, and Josh did mention that he had planned to replace those in some of them. So, or in whichever one that I had mentioned it about, or to actually put them in or replace them, whichever it was. I don't remember if they were broken or just missing. But hopefully that's something he's doing on all these properties because it is, I think it's really become sort of a minimum standard of safety for electricity anywhere where it's likely to come into contact with water. This is another one with an active, supply line leak, which or an active leak. Um, these are just things that over time, water leaks just cause a lot more damage than it costs to just fix the leak. And so, staying on top of that kind of stuff, I just find it's just really imperative, right? But it also, like again, I mean, I can imagine either one of those, like if you've got to send a plumber out there, I mean, hopefully don't you don't, right? Hopefully you can send a handyman and you're paying them by the hour and they can handle it. I mean, I don't know, I'd really be interested. I'm going to try to ask Josh to let me interview him because I'm interested. It seems like so difficult to be a property manager in these tiny markets where like you can see it looks like it's been the same home inspector in all these different places. So like he's driving all over the place and you think your handyman's probably doing the same thing, right? I mean, he's probably it's a not a dense area and so you have to like really um cover sort of a big footprint to make it work and then do you end up spending a lot of time driving and not as much time making money? I don't know. I mean, that's one of the things that I think about in these types of markets, it just seems super tough. Yeah, he made a comment about there not being any ventilation in the attic, but then the attic looks to be okay. This is something it is, um, again, it's just good for it usually makes your roof last longer. At least it does here in Texas where there's heat, right? Because it helps your attic stay a little bit cooler having that ventilation, and so that it helps your roof last longer. Um, I think that they ventilate attics everywhere, but this is a colder climate. I don't know how important it is there, but he didn't seem to think he did leave it as an action required though, right? But then says everything looks to be okay. Um, there's only a couple other things in here though that I wanted to mention. Looked at the roof. Lots of little things you want to look at it. Oh, mentioning that the foundation is crumbling. It is a slab foundation. This Josh had mentioned in the notes that this is actually just the foundation on the garage that's been converted. And so actually I've seen a lot of these garage conversions where the foundations are horrible because it was never meant to be, it was just supposed to basically be something to park on, right? And it wasn't so uh they end up being pretty rough. And he's like, I think his note actually just says nothing's going to happen with it or something like that. I want to show you the note because I thought it kind of made me like, let's see. This is one on the garage. Nothing is going to happen with that. Yeah. So, um, I think his just general mindset towards this stuff is much different than mine. Because I worry about everything, but I've always looked at properties as, um, longer term holds than just the 1 year. Although I think it's a good strategy to really boost your returns, and I have had relatively short holding periods compared to these like forever hold people. But the longer your holding period, the more you want to just have a property that's like all your issues are buttoned up so that you don't have, unexpected expenses. But I think, I know he said that this is for me, it's something that I wouldn't worry too much about because again, slab foundations, like we have a lot of problems with them here, but they can shift quite a bit before you start to have a problem. It is a cosmetic issue, and then they can actually end up breaking your plumbing and whatnot in the future if it shifts too much. Um, that is if the plumbing is run underneath this property, which I don't know how they did it when they converted the garage. It'd be interesting to actually look at, but oh, and then having sections of the soffit not covered and not painted. To me, I mean, like I would just, I don't know why you would leave that like that, right? Like it's not a super expensive thing to do. It makes the wood last so much longer when you just keep it painted. Um, I don't know. I'm not sure, why that would not be the case. But again, I think like it is in a very cheap market like this where like the rents are so low. It just has to be a constant battle between like if I spend that money, I made no money this month, right? And so I think that using when I was using the street view and looking around, like there are just a lot of properties that just look like they're maintained in a similar fashion, right? And so and he's able to rent these up relatively quickly. So maybe it's just a regional thing too, where people expect it a little bit more. I really don't know. Um, this section, I'm not sure that that's also part of that exterior foundation from the garage part. I don't know. It doesn't actually look like it here, but I'm not sure. Um, I thought there was one other thing that I wanted to show you on here, but maybe the foundation one was the last one. I really hate the format that this property inspection is in, because he ends up repeating stuff a bunch of times. And it is not, there's a lot of times where it says action required, but then doesn't give you the actual, like what they recommend. Oh, this is the crawl space. You know, every picture I've ever seen of an old home's crawl space, they look pretty rough. So even though like that does not look great to me, it's also not terribly surprising. So let's see. Oh, I know what the last thing that I wanted to tell you about on this one is they have a one of the heating systems. Let's see. Oh, they did make comments about the electricity looking good. one of the heating systems I think was put in, let's see, manufactured in 1996. So I was in high school. Uh, this is an incredibly old heater to still be running in a home. Um, it is, I don't know. I think um, uh, I, I'd want to replace it as soon as reason, or like, and I mean, it also looks like very dirty and whatnot. Now, one of the things is heating systems, they are relatively simple, and a lot of times you can get them to work for much longer than their useful life is supposed to be. And much longer, where if you don't have central AC attached to it, you're not having to replace them, because like ACs, I think, especially here in Texas, I mean, like we replace them every 10 or 12 years, maybe 15 if you're lucky. But a lot of times that comes with replacing your interior unit as well, and includes your furnace. Here, I'm sure it's a little bit different than that, but I just can't imagine like this being anywhere near as efficient as the ones that they have today. Now, obviously, your tenants are the one paying for their heat, so maybe again, maybe it doesn't become cost effective to do this, but at a certain point, like I would expect. So, we have some major components that are pretty rough and pretty old looking, right? We've got the roof and we've got this heating system. Um, the foundation didn't, it was doesn't to me it seems like, I don't know. I sort of agree with what his thought is on that. Like, it's what's really going to happen, especially depending on how old that slab foundation is. Um, I mean, they do just tend to break down, like everything just breaks down over time, right? And so if that's depending on how old it is, like I just expect it to continue to deteriorate, but is it going to cause a problem sometime during my hold period of this if I bought this? Maybe not. Uh, and then outside of the inspection, I mean, you can just look at this and it is, I don't know, like that's an interesting carpet choice. I'm sure it's probably just really old and they just keep cleaning it. And again, like the expense to redo the flooring in a place like this relative to the cost of the unit itself is, it just gets tough, right? It gets tough to maintain things in a manner that I'm just used to seeing, properties in our market. You have, I don't even know if this is wallpaper. I guess that must be wallpaper. I can't imagine that that's just that dirty or something. But yeah, I mean, they're not very attractive units, but this is definitely like low cost housing that's being provided, right? I mean, this is the people that are renting these, they probably do not have a lot of other options. And so, man, but they are just like it's really interesting to me that three units were rented up as quickly, because when we saw the leases, it looked like they were all like basically right away. Um, I don't know. It seems like it's just like a very different world than what I'm used to. Uh, I think that, so, to recap, I think that you struggle just with the very low rent relative to, the price of maintenance, right? Like that's my only real concern. So I think over time, you're going to have some vacancy collection loss, and then you're going to have some repairs and maintenance and capex, and that's going to eat into this yield a little bit. I do think though that you could eat into that a decent amount and still do okay. And actually too, um where the co-owner is responsible for their percent of um capex items, at least, that's helpful as far as for repair issues. But I don't know. I think that's really all I want to say about that, right? But because it is a pretty decent yield, I think this one could be, you might end up with a high single digits once you really, over, like, as an average, once you account for those things. And then, the value, this one is actually the one I think is makes, it is a 5% premium over what the appraisal is, but the appraisal, the way they reconcile the 110 and the 140, just reconciling it at 110 seems a little, I don't know, it's not very generous of the appraiser. So I don't absolutely hate that. Comparing it to this estimate, it looks terrible, but comparing it to what Realtor thinks the value is, it's 122. And I think Realtor, do they have the right beds and baths? They don't list that at all on here, but they have the right square footage. So, but Zillow has the wrong beds and baths. So, um, even though, and then again, like we're paying a big premium over what it was bought for last year, it would be really great to find out if if there's been some work done, what was actually done. Was there, or is it really just like he bought it, listed those units immediately and was able to fill them up? It would just give us a good indication of, uh, one of the things too, though, when we focus too much on what somebody paid for it, like he might have just gotten an unbelievably good deal, right? It would have been on the market for 70 plus days. And his strategy is just to make a bunch of low ball offers, right? So it's not necessarily just because that was the price that he paid for it, that's what it was worth, right? Like, I mean, there's been plenty of times where I've bought properties, and sometimes, especially I've done this more with land than anything else, where I bought it and was able to list it and sell it right away for a premium just because it wasn't listed well, just because the description was wrong, or just, for different reasons. And so, I try not to focus too much on the fact, like it's that he's bought it so much less last year. Um, and so if I'm really just looking at, I don't know, it is, again, I'm paying a premium and I don't like the idea of paying a premium, but I also think it's just very difficult to value properties like this. It's 3 units. It's in a very small market. I'm sure, it's over 100-year-old property. I'm sure it's really hard to get an apples to apples comparison and get a very certain value. So like I said, I mean, this is my favorite of the ones that he has listed. It's still not one that I'm going to buy. I mean, I think, like, I want to be in a bigger market. I want to be able to maintain properties at a certain level. And I do. I really just think, the more I look at these and, got some of his responses to stuff, I think it's just not possible, to have such a low rental rate and be able to keep those units, maintained in the fashion that I'm used to seeing. I think that's really all I'm going to say about this one. Um, Tickle the like button if you haven't already. And then until next time, I'm going to keep making mistakes so that you don't have to.